Hello, my name is Tony Bowen, and I am joined today by my colleague Wendy Seligson. We are from FMA. On today's webinar, we are going to be discussing the Paycheck Protection Program. We are here to provide an overview on how nonprofits can get ready to apply for the program. We are recording this webinar on the morning of April 3rd, after the SBA released new guidance and a new application. We encourage you to check out the SBA's website for continued guidance. So what will we be covering today? First, we're going to start out with a basic overview of the program, and then we will discuss how nonprofits can apply, how to estimate the average monthly payroll and total loan amount that you will need to complete on your application, and then we will share additional resources that are available. I'm now going to turn it over to my colleague Wendy to get us going.
Thank you, Tony. I'm pleased to be here today to share an overview of the Paycheck Protection Program and how nonprofits can apply to get the benefits from this program. The federal government, Congress, very recently adopted the Paycheck Protection Program to help to keep workers on payroll. It's an important thing to keep in mind as we learn more about how the program works and how to apply for the program. The goal is to keep workers on the payroll and to keep people able to get the salaries and the wages that they have been receiving before this recent events. The Small Business Administration will forgive the Paycheck Protection Program loans when employees are kept on the payroll for 8 weeks, and the money is used for payroll and other important expenses, rent, mortgage interest, and utilities. There are 4 basic questions that need to be answered to really understand the program. How can nonprofits apply? How much can nonprofits borrow? What can the nonprofit use the loan for? And how much of the loan will be forgiven? But the goal in many cases is most, if not all, of the loan is forgiven. We're going to take a look at the answers to each of those questions. The first question is, can you as a nonprofit apply? There are a few simple rules. You need to have 500 or fewer employees who principally reside in the United States. This is a standard Small Business Administration requirement. 500 or fewer employees. You must certify that the current economic uncertainty is affecting your nonprofit. You must be a 501c3 or a 501c9 and have been in operation at least as of February 15th of 2020. So the eligibility requirements are very simple for nonprofits. You need to have 500 or fewer employees. The next question that we're looking at is how much can a nonprofit borrow? The basic rule is nonprofits can borrow 2.5 times payroll. The program is designed to help to keep employees in jobs during this period of crisis. And so the loan amount is 2.5 times payroll to help your nonprofit get through this period of time. And payroll includes salary, severance, paid leave, benefits, and some taxes. And this information is in lots of the guidance materials that you can look at as you're preparing to your materials and the loan application. You can borrow up to $10 million max. Your lender will do the final calculations, and we have on our website in our toolkit a calculator that will help you estimate how much you can borrow. 2.5 times your payroll. The next question is, what can a nonprofit use the loan for? The loan can be used for payroll for 8 weeks, 2 months to get through this period of time, with at least 75% of the loan going to payroll. It can also be used for some other important expenses for nonprofits, like utilities, rent, and mortgage interest. These are the expenses that qualify. Once your nonprofit has borrowed the money, the question is how much of that loan will become forgiven? How much of that loan will be converted to a grant? You as a nonprofit are able to keep all of your employees on payroll, so you maintain a similar amount of full-time equivalent FTEs as you've had in the past, and you spend it on approved categories, and there are no significant decreases in salaries, in this case defined as no decreases by more than 25% for people making less than $100,000, the loan will be forgiven. The details are in the guidance that accompanies this overview. Overall, if you're able to keep employees on payroll and make no significant cuts, your loan will overall be forgiven. So what do you need to do immediately as a nonprofit in order to qualify? There are 3 important things to do right now if you haven't started them already. The first is to reach out to your bank and confirm if they're an SBA lender who will be processing applications and get in line. Find out what it takes to get in the queue and get in the queue. Stay with your contact with your bank till you're in a queue for your bank. Every bank is creating those right now. If your bank isn't an SBA lender, seek a referral or try to find a bank through other relationships that you have. The second is to make sure your board has approved your loan. We also have a template for a resolution on our website, the FMA website, at the toolkit that you can use as a starting point for getting your board approval. And thirdly, if you haven't done so already, start right away to gather payroll information for the last 12 months so you can establish what your payroll is on a monthly basis and borrow 2.5 times that. What documents do you need to apply? In general, what we're seeing is you'll need to complete a very short application, the SBA loan application. You'll need to complete a tax information authorization form so that your bank can confirm your payroll and other information with the IRS, and you'll need 12 months of payroll data. What else might you be collecting just in case? Because every lender will have their own requirements. So the Jewish Federation of North America, which has been a colleague of ours in this work and has created some wonderful guidance, and you'll find information about how to reach them in this PowerPoint and also on the website. The Jewish Federation of North America suggests your payroll tax reports, which have been filed with the government, also copies of your payroll information that you can produce from your payroll system, whatever you're using, and then documentation of your other expenses like your health insurance premiums and your retirement plans. You might also consider having proof of your incorporation and your bylaws, typical kinds of materials you would have when you're doing a loan borrowing.
Thank you for that overview, Wendy. So we wanted to show you the application itself. You can see it is very simple. It could be completed in a short amount of time once you've gathered the relevant information. On the next slide, we will share how we recommend you complete each field. In terms of filling out the ownership section as a nonprofit, we recommend you write NA 501c3. You can download the latest application and begin filling it out so you're ready to share the information with your lender when they begin accepting applications. Here is another view of the fields we just saw, each one laid out with our suggested guidance on how to complete each field. Now we're going to discuss 2 of the calculations that appear on the application, the average monthly payroll and the loan request. Let's start with a way to define average monthly. Our interpretation of the guidance is you have 2 options. Most applicants will use the last 12 months of payroll information from before you apply for the loan. In this case, we recommend using April 1, 2019 through March 31st, 2020. If you are a new organization, you may want to consider using January 1, 2020 through February 29, 2020. If you are a seasonal employer, we recommend checking the latest guidance with the SBA and with your lender before applying. Please note that there have been some discrepancies whether to provide information for the last 12 months or calendar year 2019. Please check with what your lender is asking for. If you have already gathered estimates for calendar year 2019 and are otherwise ready to submit, we suggest you can submit what you have gathered and should have 2020 data available if requested. So now let's define payroll. According to the guidance, what counts as payroll is compensation, such as salaries and wages, payments for vacation, parental, family, medical, or sick leave, allowance for separation or dismissal, a variety of employee benefits, and state and local taxes that have been paid and assessed on compensation. What doesn't count as payroll? Any excess compensation for employees with annualized salaries that exceed $100,000, the employee and employer portion of FICA taxes, federal income taxes withheld, the compensation of an employee whose principal place of residence is outside of the United States, some sick or family leave wages that are tied to the Families First Coronavirus Response Act, and we assume that long-term disability and accidental death and dismemberment costs are also not included. As with all of this presentation, we continue to encourage you to look through the guidance as some of these definitions are changing on a daily basis. So overall, what's the calculation? You're going to take the total allowable payroll costs during the calculated period divided by the number of months in that calculated period. That will get you your average monthly payroll. As we mentioned, the default will be the last 12 months of payroll. So you'll be taking your total payroll and dividing it by 12. Do remember that the lender will ultimately calculate after you apply, but the goal is to get as close as you can. So how do you calculate the loan request? You simply multiply the average monthly payroll you came up with by 2.5, and that will get you the loan request. Average monthly payroll of $100,000 would be a loan request of $250,000. As Wendy mentioned, this is intended to get you through 8 weeks of payroll, plus to have some funding for rent, utilities, and mortgage interest. Note, if you are refinancing an EIDL loan, you're going to add the outstanding amount of an EIDL loan made between January 31st, 2020 and April 3rd, 2020, less the amount of any advance under one of these loans to the loan request. We don't believe that will apply to most people. At FMA, we love a good spreadsheet, and so we've created a calculator to help you estimate your average monthly payroll costs and the estimated total amount. If you go to our website, you'll be able to download the calculator. And in the Excel spreadsheet, you will see 3 tabs. The first is instructions, and then the second are 2 different calculator options depending on what data you have readily available. We recommend starting with option number 1, where you will be inputting all of your employee data. To get started, you'll first answer which statement best describes your organization. This is where you have the opportunity to describe if you're a new organization or not. We've left the default to be that the payroll period will correspond to April 1st, 2019 through March 31st, 2020. Next, you're going to complete each column of data for all of your employees, which you will see here. After you input the data, it will run an automatic calculation so that you get your average monthly payroll cost and the estimated total loan amount. As we discussed earlier, this is just an estimator, and you'll work with your lender to calculate the very specific amount. We have a second option if you don't have all of your per employee data readily available by the time you're running the calculations, where you can put in the amounts that you know for the total payroll and then do an estimate of the percentage of total payroll that you believe are for benefits and state and local taxes in order to calculate your unallowable and allowable expenses. In addition to the FMA PPP calculator, there are lots of great organizations that are beginning to create similar tools, and we encourage you to check them out. Jewish Federations of North America also have a tool that's available through their website, and we'll be sharing more about where you can access that towards the end of the webinar. So when can you begin applying? Some lenders are starting to accept applications on Friday, April 3rd, but we are seeing indications that many lenders will be waiting until Monday, April 6th, once the guidance is clearer and everyone has had time to build their intake process. Either way, we encourage you to be prepared and act quickly. As we start to close out today's webinar, we want to share a few last remaining tips and tricks. As a reminder, the program is first come, first served. So if you have any doubts about whether or not you should apply, at least begin the conversations with the bank and start talking to your board. There's no fee to apply, and there's no obligation to accept the loan if it is offered to you. As we've discussed, guidance is evolving daily. Please be prepared to pivot. And lastly, do not assume you will get approved. At FMA, we care about the financial health of nonprofits all across the sector. We encourage you to continue monitoring your cash flow, connecting with your funders, and going through scenario planning. We have provided some additional resources on our website, as well as on strongnonprofits.org, including a cash flow template to help you monitor your cash flow, and a revenue scenario analysis tool to help you analyze the likelihood of ongoing revenue. Lastly, there are 3 questions that have come up frequently that we wanted to share with you. First off, many people have asked, are independent contractors part of average monthly payroll calculations? Simply put, no. The newly released guidance from the SBA clarified this. Next, beyond the application and documents requested from the lender, what else might they want to know? We know that for some of you, this may be the first time that you've actively engaged in loan conversations with the bank. And so the answer is, it will vary. You should be prepared to discuss the impact that the economy has had on your cash flow and your ability to deliver on programs. You should also be ready to discuss the mix of revenue and expenses that you have, and what decisions you are making about how you need to adjust your operations in this climate. And lastly, if we receive restricted government or foundation funding that cover positions, does this affect how much we can apply for? Short answer, no. It does not affect how much you can apply for. But we do think it is worth discussing after you submit your application how forgiveness would affect how you allocate, track, and report your funding. We are going to continue to track frequently asked questions and post those on our website. Speaking of our website, we want to share a few more resources that are available to you. As I mentioned, we have a payroll protection program toolbox that we are updating every day. We encourage you to check it out at fmaonline.net/PPP toolbox. On our toolbox website, here are a sample of tools that are available. We have the PPP calculator that we discussed earlier. We have a template that you can consider using to enable your board to pass a resolution to authorize the loan. And we have a script for how you can have the first conversation with the bank about PPP. We hope you find these helpful. We also encourage you to check out tools and resources that others are putting out on a daily basis. For example, the Department of Treasury has an official information sheet, and that's what we keep looking for continued guidance. We expect them to update the information sheet on a regular basis. And as we mentioned earlier, JFNA has some terrific resources on their websites, and they are also offering ongoing webinars that we encourage you to check out. So remember, there's 3 things that you need to do immediately if you are interested in the Payroll Protection Program. Reach out to your bank to confirm that they're an SBA lender and that they will be processing PPP applications. If not, ask them for a referral. And then determine arrangements to submit an application. Secondly, get authorization from your board via a resolution to apply, and you can use the resolution template that's in the toolbox. Lastly, gather payroll information from the last 12 months to establish how much you can borrow. Thank you again for joining today's webinar. We hope you found this helpful and informative, and we encourage you to check out fmaonline.net to stay up to date on the latest updates related to PPP. Thank you.